Good afternoon again, everyone. Let me welcome you formally to our annual media lunch. We have a particularly busy day today because we're announcing our next strategic plan. So without taking any more time, let me invite our Chief Executive, Mr. Charles Lee, to the stage, and he'll kick us off.
Great. Just here. Uh-oh. Sorry. This thing drops off. I need to get it up. Got it? Okay, great. Welcome to Hong Kong Exchange's 2016 and 2018 Strategic Plan Announcement Media Event. And I know the market is very choppy. Yesterday was under Chinese calendar, 大寒, very, very cold. The market is also very cold. I know this is the time that usually is not people not in the mood for a long forecasting to the future. But as an operator of the exchange, we do need to always constantly looking into the future. What as a whole market, what we need to do every day, rather than obviously every day the market to go up and down. I think we are entering into very challenging times ahead, but we still need to plan for the future, execute for the future, and grow into the future. So that's why we're here today. So, I think at least for the lunch, I hope everybody bring your attention back to a little bit calm down, look into the future. We know market is very choppy outside there, but we do need to, continue to be, looking at what Hong Kong Inc., Hong Kong Exchange as a whole market, what we need to do. So before we do the presentation, we have something special for you to take a look first, and then I'm going to be back on the stage and we're going to discuss. Thank you.
For every pioneer, it begins with a dream. Ambition drives us to dream big and create a more connected world. With foresight, we stay ahead of the curve, bringing markets together. Striking the right balance allows us to innovate without giving up our core strengths, respect our differences, and overcome challenges together. Reliability earns us trust. And through partnerships, we forge connections. These are the values we hold closest. Values that bring the world's financial markets together. At HKEX, we are pioneers building groundbreaking connections to build Hong Kong as a premier investment destination and bring fresh opportunities to investors and businesses. Connecting China with the world, we're reshaping the global market landscape. HKEX, the pioneer of the world's financial markets.
So as you know, today we are unveiling our new corporate logo. And as you can see, the new corporate logo, it's looking very contemporary. But the most important thing about our corporate logo is that it's actually completely aligns with our overall strategic planning, with our overall strategic plan moving into the future. And we have heard a lot of concept. We want to be a pioneer, trust, balance, partnership, but ultimately building vital connections. So we see our role as the role to build a great connection between, as you can see, our new logo. And, today we're going to be basically discussing our strategic, overall strategic planning and the strategic development in the context of our new logo, because it is the alignment of our new interest. It is the connection that we're building for Hong Kong in the years to come. I think we're going to move on to the next stage, right? Are we going to have a podium, or I'm just going to continue? Oh, okay, I think we can continue now, right? Okay. Great. Now we're going to go into discussing our overall strategic planning and plan. Just a very quick recap of our history. As we said, last year's media event, we are now entering into, we started with the IPO era in the last 20 years, and then we experienced a massive period of domestic growth, in the 2000, in the decade between 2001 and 2010. And then China began to accelerate the opening, whether it's in currency, whether it's in capital market, and whether it's in many of its capital-controlled regime. And we are entering into last year, as we talked to you about, a new era, a mutual market era. And this really, today we wanted to talk to you about our new corporate logo, a new corporate identity, and how is our business evolving around that particular identity. As we all know, Hong Kong is building a vital connection between China and the world. And we're trying to, as a market operator, we bring investors together, we bring products together, and we bring people to trade product, and we bring both China and the international markets together. So in this mutual market era, we strive to be, for our Chinese clients, we want to be their global exchange of choice. And for our China clients, for our international clients, we would like to be their China exchange of choice. That's really is our vision. So in the mutual market era, our vision is to be the global exchange of choice across asset classes for both of our Chinese clients and international clients seeking China exposure. As you can see in your appetizer, we want you to get a little bit familiarized, with our new corporate logo, and essentially telling you how we should be looking at the Hong Kong exchange, business into the future. So Hong Kong is a vital point of connecting China with the world. And now, before we actually get down to the specific components of the strategic plan, we would like you to understand what we think is the driver of our overall strategic planning. We want to look at China first. As you can see, China today, the biggest thing that we will see a trend happening in China is the redeployment of its national wealth. Today, most of its national wealth is still in the banking system, $30 trillion US, and equity and debt market are only $8 or $7 trillion respectively. That particular ratio in any other developed economy is the reverse. The banking side is the smallest. The equity side usually is twice or three times as large as the banking side. And the fixed income debt market is the largest market. So clearly over the next decade, we will see a significant amount of redeployment of China's assets, national wealth, moving into fixed income and equity. That's an inevitable trend. And we are also going to start to see that money is moving into new economy, is moving into privatization, and into lower reliance on banking funding. That's China. Quickly look at international. So our strategy, the next strategy, is to bring international investors accessing Hong Kong into China. So what do they need? What do they want? What is the current situation? Today, the mainland China capital market is about this much size, but only 2% actually are from international investors. So through a whole range of QFI, RQFI, Stock Connect, MRF, CIBM, there's huge room for that to go up. So the drivers, equity index inclusion, MSCI inclusion, SDR inclusion, easing of access schemes on quotas and restrictions, internationalization of Chinese benchmarks. All of this going to drive that greater international investor participation into China. So rising mainland outbound capital market is another big trend. We look at China itself, we look at international, let's look at the China outbound investment. China outbound investment for corporate outbound direct investment have gone about 1,100%. However, portfolio investment in terms of outbound investment is still growing very, very slowly, and outbound portfolio investment remained very flat for almost the entire decade. We want to build the connection. We want to build the connectivity for that to ultimately go up. So investors and corporate needs to diversify assets and risk appetite. QDII2 will drive further asset allocation. So for this money, we want to make sure Hong Kong is ready for their arrival. Not only just investing in some listed companies over here, but there are many other things they need. So our strategy is to figure out what to feed into that massive potential growth into the future. So what's Hong Kong's role? Hong Kong's unique position is really a mutual market price discovery venue. So we historically have only talked about access and product. We really want to make sure everything ultimately in Hong Kong have a substantial price discovery for us to be the relevant center, global financial center with China as the home market. So the overall strategy, the driver, is really cross-border benchmarks, risk management products, Asian time zone and convenient access. These are the three key drivers to make sure that we develop product and access for both groups of investors to accessing in Asian time zone, to risk manage, and also mutual access and also benchmark access. So how do we see our role in this overall mutual market? We essentially, everything we're going to be doing are one of the two things. We either a cross-border access platform, or we will be a destination market. So for some of the product, for some of the investors, we are only building an access for them to move into the other market. And for many other investors over time, we want to make sure that we have enough products in Hong Kong so that we become a mutual market, destination market, rather than only a pure access. So we then will be looking at our strategy in all the three key asset classes. What we're going to do in equity, what we're going to do in commodities, and what we're going to do in fixed income and currency, FIC. Let's look at equity quickly. In equity, the traditional fundraising, we all know our equity, our original business of 20 years is Chinese product, IPOs, coming to Hong Kong, international investors coming here to invest in Hong Kong companies, largely mainland companies, about 60% of market cap mainland companies. That is our business in the past, and we have been extraordinarily successful. Now, we want to make sure, so that's last 20 years, and the last 2 years, Stock Connect is really what is the most important. Stock Connect, we bring the international investors going through Hong Kong into China. And we bring Chinese investors going through Hong Kong to invest into Hong Kong's own product. So it's the access product is what we did in the last 2 years. So overall in equity, let's go down to specific key strategic initiatives that we are pursuing today. The first category is really core listing franchise. This is our traditional business. What we're going to do there, we wanted to make sure that we continue to market Hong Kong as the venue of choice for mainland and Hong Kong issuers. We have to continue to enhance our regulatory regime. And we will be evaluating new ways of attracting new companies, whether or not we revamp the GEM, or whether or not we come up with new third board in order to accommodate the new companies. I'm sure later on you're going to be asking a lot about listing questions, and I will leave the details of those questions, answers to those questions if you do raise them. But here, there are a significant amount of regulatory work that have to go into the next 3 years to make our regime accommodating to the new opportunities, but at the same time continue to enhance us as being the most transparent, the most reliable, and the most trustworthy regulatory regime that both allow many of our traditional clients to continue to list here with ease, but make sure that our investors are well protected and we continue to be one of the best corporate governance center in the world. The second category of what we're going to do is really expand connectivity. And here, what specific things we're going to be doing on that second category, that is basically 互联互通, how to expand 互联互通. At Shenzhen Connect, that's the first thing we're going to be doing. And, and there's a lot of discussion on that already. The second thing is we're going to add a lot more products onto Shanghai Connect and Shenzhen Connect, whether it's ETF, listed bonds, or even other future products. The third thing we're going to do is Primary Equity Connect. This is what we call 新股通 in Chinese. So essentially, all the connect we have done to date is the company have already listed here or listed in Shanghai or Shenzhen. And the investors from each other market is accessing to a company that is already listed there. The Primary Equity Connect is trying to explore whether or not we are able to find ways to connect the market by allowing issuers in international issuers to go through the connect model, but offering primary offerings into China. And conversely, whether or not some of the China offerings can actually also use Hong Kong as part of the revenue, a part of the avenue for them to raise primary money from international investors. So 新股通 is essentially about selling in a primarily rather than already listed companies. This potentially, if successful, again, this is our strategic plan. This is not a reality. This is not even close to reality. But if it is realized over time, it will fundamentally change the way that we have been seeing by investors and issuers. So in the past, Chinese issuers treat us as the primary listing venue. International investors coming here because they think that's the only way to go into China. Over time, we want to make sure that Chinese investors are able to access to Hong Kong in order for them to potentially invest in Chinese international companies like Apple, Disney, and others in Hong Kong. And at the same time, for international companies to feel that Hong Kong is the place for them to potentially to list and in order to access into the domestic investor base. So that's the second category of how are we going to go about doing Future Connect. Third category is to expand our derivative product suite. There, we want to find ways to do A-share index futures and options. Very, very challenging, particularly in light of what is going on in today's A-share market, the challenge they're facing. And right now, probably not the best time to discuss with them about A-share listing, A-share index futures to be listed here, even though we have made a lot of progress before the market went into the current difficulties. We're also going to potentially considering introducing A&H premium products. We're basically using this sort of product to allow investors to be able to really making our overall different product to be, to be more efficient and allow people to arbitrage and develop and creating greater trading activities. We also are going to develop more sector index products. We're also going to be developing international benchmarks for Chinese investors, or international benchmarks with some sort of a China underlying, which you could argue is also part of number one as well. So these are the few things that we're going to be focusing on as part of our derivative strategy for equity. So in summary, we want to grow our core listing business, and we want to expand Connect, and we will expand our derivative product suite to encompass a much greater range of activities to make our market a more active market. What are we going to do in commodities? Commodities, in the past, Hong Kong has very little history in commodities. So we also correspondingly have very little confidence that we are able to build commodity business because we are a small city and we do not have access to a large piece of land and we cannot be trading physical commodities. And as a result, it's hard to imagine how Hong Kong can become a commodity center. Our first steps is in our last 3-year strategic plan. We acquired London Metal Exchange, LME. So for the commodity product, market, it's the same. It's investors and products. But here the product are more like pricing benchmarks. And it's the pricing benchmarks that give you rise to additional activities for you to develop a derivative product in order for the investors to trade. So by buying London Metal Exchange, Hong Kong Exchange become a global commodity exchange, but heavily focusing on international investors and international benchmarks products in base metals only first. But that happened to have the biggest relevance for China. So if you look at the commodity business, I want you to get familiarized with this particular charts to understand, because commodity business is slightly different than equity. But exactly how do you develop a commodity business? How do you look at a commodity business? A commodity business usually looks like this shape. You start with physical users, producers, or consumers of metal, of copper, of aluminum, of steel, of anything. Miners, right, selling it to smelters. So that's called a physical user. They trade. When they trade, consider them to be like an IPO in the equity context. When they trade, and then you have a lot of middle people to trade. These are traders, banks financing trading, logistic warehouse providers of providing services for trading. All of this trading, many of them are trading not on spot. These people basically trade. You sold me, I smelled it, and then I produced something. It's done. It was only once. These people trade, however, to manage the risk, to hedge, and therefore they trade many times. So here, consider this. Consider this to be like in the equity context, secondary market trading of an IPO. So you have an IPO down here with the price. And then a lot of people trading that price in an IPO secondary market. And then, but the real commodity exchange at the end of the day is the risk managing tool. So it's becoming, then you launch futures, derivatives, options. On top of the pricing, trading pricing that generated by these people, supported and underlined by these people. And then you have futures trading. So that's how London Metal Exchange, we bought the futures part. We also bought the certification of warehouses part. But this is all the IPO market, all the physical market going on every day. So London Metal Exchange look like a very solid foundation with real economy here, 实体经济, trading and financing, and ultimately risk management and speculation in pure financial participation. That's what we bought in London Metal Exchange. Now let's look at China. China today also have commodity exchange. They also have a lot of commodity trading. But the China's financial market, in China's commodity market, in many ways it looks like an inverted pyramid. The massive spot physical users, Bao Steel, are buying iron ore from Brazil, from Australia, and people are selling copper to the various processors and smelters. But all of these people just physically trading, they're not part of an overall commodity ecosystem. They really don't really go into the futures market because the futures market in China is largely financial speculators, particularly retails. So very substantial amount of trading in China's domestic commodity market. But that market is so financially driven that every day the daily trading is many, many times of open interest. Open interest is the real economy who is actually using commodity. And so China's market today, even though looks very substantial commodity trading, Shanghai, Zhengzhou, and Dalian, but they're not really rooted in the real economy. Most of the trading are cash settled. They're not physically delivered. They do not have an ecosystem to truly support the activities over here. So essentially, you could say that in the China's commodities market, there's not a lot of IPOs. And there are not a lot of real secondary traders. But you just have a particular derivative underlying, basically people just speculate what that underlying could be. So it's a very different kind of market. So what are we going to do? We bought London Metal Exchange over here. In Hong Kong, what do? Obviously, we're going to talk about what we're going to do in Hong Kong vis-a-vis the blue. But what we're going to do vis-a-vis the red. So the first thing we're going to do, well, not first, but basically, not in terms of timing, but the first thing we're going to do is to try to say, the LME, the financial participation is small. Real economy is big. Open interest here is a multiple of futures trading, but we could use a lot more trading. Hong Kong Exchange, we obviously like trading. Oh, I think somebody said I need to put this thing here. Okay, got it. You have everything, right? Yeah, no? I thought somebody said I have to turn something on. Did I turn it on? No. I did? Okay, thank you. Okay, so the first thing we're going to do is trying to see whether we are able to find ways to have more access to Chinese financial players, particularly high net worth individual investors who can trade internationally. We call that financializing LME, making London Metal Exchange more financial, 更加金融化一些. The second thing we're going to do is to use our great expertise in the global commodity market. We control 700 warehouses globally. We use that expertise to see whether we are able to help China's real economy to physicalize. That's why we use the words physicalize, even though it's not, grammatically it's not the right words, but you understand what I'm trying to do. So now, how are we going to do it? So the point here is that we want to see whether we can get more financial trading into LME or Hong Kong so that we have more active derivative trading. And we want to see whether we can go into China onshore to develop a physical market so that we have a lot of IPOs there. And then we can trade them secondary market. And then we can use them as a benchmark to do other big things into the future. So what are we going to do? In the specific strategic initiative for commodity, what do we do on financializing? The first thing we're going to do is in Hong Kong, we're going to have a lot of new products. We're going to have a gold product probably. We will have ferrous and steel complex, basically steel, in London. And we wanted to see whether we can find ways to have LME and Hong Kong Future Exchange trading, to be more, helpful to each other. Another way of financializing LME is London-Hong Kong Connect, the one that we signed in London. And here, basically what we are trying to do, if you think about London-Hong Kong Connect, what do you mean by that? So essentially what we're trying to do, here we said bring greater Asian participation into LME, financializing it, trading and clearing links, almost like a Shanghai-Hong Kong Connect, but this time is London-Hong Kong Connect. Initial focus is on QDII2, who are already here, the people are already here. Initially talking about them trading London product. There are two ways of doing this. One is to bring the London product over here so that we trade here. So we have a mini, but the mini is renminbi, is monthly contract. What we can do is also bring another London product, exactly the same London product, but bring them into Hong Kong cash settled without doing anything so that Hong Kong people can trade. That's one way of financializing it, connect. Another way connect is that we bring Hong Kong investors trade directly into London, but in Asian time zone. What's the difference between these two? The difference is the first one, you're trading in Hong Kong, Hong Kong have a separate liquidity pool. The second one is you go into the same bigger liquidity pool in London. So we need to balance between these two. This one is easier to execute, cheaper, because we just bring the product and launch them here. But it's unlikely to be hugely successful because it's a different liquidity pool, but it's easier to execute. The other one is that you can bring a lot of liquidity into the mother liquidity pool in London, but it's a lot more difficult and challenging and expensive to execute. So we're going to do both. We're probably going to do the cheaper one first, and we're going to do the more expensive one later. What do we do? What are we talking about is physicalizing China. We're basically saying we're going to build a mainland spot commodity platform. We want to build an IPO base in mainland. So we want to explore creating a spot commodity trading and financing platform in mainland China, most likely across the border in Shenzhen. We want to develop and internationalize China's commodity benchmarks grounded in real physical economy. We think we're very much well placed to fill this gap. There are three you need three key qualities in order to deliver a success on that. You need to really know commodity and have a lot of resources, which we do. You really need to be motivated to do it because it's a lot of hard work. And three, you need to have public trust and credibility, which we do. A lot of people have one or two, very few have all three, and there's no reason why we cannot succeed. But again, people in Hong Kong, particularly if you do not know commodity well enough, is always going to say, why do you want to go there to spot market? Is that what the exchange should be doing? Well, the exchange, like LME, is doing exactly that. The reason we wanted to start with the physical on that pyramid is because that's where the IPO is. That's where the physical price is going to be. That's where the physical price can then be traded on a forward basis by financial users, by financiers, banks, and traders. And then that active trading of physical products is the foundation of commodity futures exchange. Because commodity exchange is all about future exchange. But the future has to be based on something. Cannot be in the air. We cannot just all speculate weather, speculate somebody else's scores. Then that's becoming a gambling. Real commodity exchange is rooted in the fundamental economic activities. That's why we want to do that. Another key thing about financializing is what we have been doing before, but it's probably going to slow down because of what is going on in China onshore, is building connectivities with the three domestic commodity exchanges. I think before the crisis last year, we have had extensive discussions with all of them, but basically to see whether or not there are ways for us to connect with them in a similar way that our investor trading their market, their investor trading our market through a connect model. This is probably going to be hard to discuss right now, but it is part of our 3-year strategic plan that if we are able to do that, that's another way for us to financializing the international market and also help Hong Kong become a much more important access market. So, to recap, our business in commodity is trying to find 3 ways to beef up our London, Hong Kong business, particularly in the participation of financial players. And then we're going to physicalize China by going into China to becoming a great foundation of commodity price discovery. And that price discovery allows us to develop into a truly global, truly competitive, truly powerful commodity exchange in the Asian time zone, supported by the foundation of China's commodity, overall, activities. FIC, fixed income and currency. Here, again, we have very little legacy before. Hong Kong being a small, a city without a money issuer, or our government doesn't issue money. Our money is a note that essentially is packed with the dollar. And, the sovereign, which, the Hong Kong government doesn't need to issue a lot of debt. And it's a small economy, so we do not have the foundation to become a successful fixed income and and currency, particularly fixed income, market, because we just don't have the sovereigns to build the benchmarks and the forward curves, and our corporate only issue U.S. dollar bonds. They don't really need to issue Hong Kong dollar bonds. So, traditionally we don't have a legacy, but because of China. Because of renminbi internationalization, because our unique role in that particular development, we could use that to become a great, FIC, power market. So essentially here, the driver, there are a lot of things that are happening. China, renminbi, SDR inclusion, greater cross-border FIC exposure, bond market growth is all going to drive on-exchange, OTC cleared fixed income and currency product. So what we wanted to do here is that we wanted to become a great price discovery and risk management center for renminbi forex and interest rate. So this year and continue next year, we're going to add a lot of renminbi products. We're probably going to pair renminbi with a number of other currencies, whether that's Aussie, Euro, Yen, or maybe Rupiah, so that people are able to individually, probably they don't trade that well, but in a cluster of pairing, a lot of activities could potentially happen. We also potentially going to work with China Inc. to see whether we can launch, MOF T-bond futures in Hong Kong. Again, in the next 3 years, not right away. We also have a lot of maybe interest rate product in mind. Second is OTC Clear. We built OTC Clear, and now this year we're going to this next 3 years, we're going to, trying to develop a whole range of new product, cross-currency swaps, FX deliverables, and OTC, forex options. This is all going to be very interesting, but it's probably going to take time to pick up. 3, we're going to try to see whether we can build a bond connect. This is very similar to, a Shanghai Hong Kong bond. In order for, again, for bond market, it's all about derivative market. So unless you're trading derivatives, the exchange won't really be able to, it's not really that interesting to trade the cash bond. But unless you have the cash bond, again, if you don't have the IPO, you don't have the secondary market trading. And if you don't have secondary market trading of equity, you don't have index futures, index, and stock options. Similarly, in bond, we need to find ways to build a bond connect so that international investors who today, China renminbi is open to a lot of central banks and big sovereign fund. They are like the QFI in the equity context. If you're strong enough, want to go directly, get renminbi bond from China directly in the China bond market, go ahead. But there are a lot of people who wanted to get China bond, cash bond, but cannot do it and do not feel comfortable doing a QFI kind of a style. We want to see whether we can build a Hong Kong-based platform with some other partners. And so that's really something so that we can provide access to international market players, electronic trading, and possibly centralized settlement. This is all very, very important into the future, but probably in the short term, it's all work and investment and efforts. So FIC, new benchmarks, OTC cleared products, and Bond Connect. So in essence, what we really have talked about overall is the cross-border access. A lot of things we're providing access. A lot of things we're trying to see where Hong Kong becoming the destination of a lot of new market products we want to develop. So this is the recap of all the things we want to do. You can choose which one is important. And I think Henry and others, and they made a pick. So we're going to have a guessing game as to when you finish writing And we're going to see which one you pick as the more important and more interesting and more sexy. So our aspirational goal, having done all of that, what is our goal? Not forecast. What is our goal? We want it to be in equity. We want to double our market share of the cash market turnover vis-a-vis the two mainland exchanges. Today, we are anywhere between 8% to 12%, and we want to see over time, after 3-year strategic plan, we will be able to double our current market share. In our equity derivatives, we want to be able to double our equity derivative volume by a variety of new equity derivatives, particularly with international benchmarks or China benchmarks. On FICC, particularly in commodities, but FICC, together, we want to double FICC's current contribution to Hong Kong Exchange. Today, whatever it is, let's say $1 billion, we want to, over time, double that overall contribution. Okay, finally, what does it mean for Hong Kong? So I think clearly, Hong Kong is, the reason we have this whole blue and red and we're in the middle is because we think we're highly relevant for China, because they trust us, we're in the same time zone, we are culturally similar, and we're first mover. But most importantly, we are also international. We clearly have international style rule of law, international standards, strong corporate governance, absolutely reliable and resilient and robust market. And combining these two give us reason and confidence that we will be able to achieve our overall strategy and mission. But the questions we're all going to be hearing a lot, are you guys too mainland-centric? Should we stay away from them? They're giving a lot of trouble lately. Does Hong Kong have the ability to really adapt? How will Hong Kong Exchange prepare for all this strategic change? I think basically, I want to answer those questions to say whether or not we're too mainland-centric. From a policy perspective, whether or not China is actually going to be able to deal with us. We think on a policy, the pace of implementation is always going to be questionable and challenging, but direction is not going to change. Every step forward they take, you can bet there will be 1 or 2 steps backward, and then they're going to go. So it's going to go like this. It's going to come down, it's going to go up, it's come down, but direction-wise, it's definitely going up. So we're confident of that. Second, opportunity. China is just too big. We are a small market here. Unless we're able to grab that big market with us and do things in a way that is mutually beneficial, we will never succeed. So China will integrate with the global market with or without Hong Kong, and we do not want that to be done without Hong Kong. That's why, from an opportunity perspective, we have to be there, whether or not we like it or not. Challenges. Today, China presents many challenges and create many risks for everybody. But whether or not we choose to connect with them, we will not be immune from them. The US market is not connected with China today, but they will always, everything happens in China immediately overnight. When we go into the evenings, it happens in the US. So the fact that we are connected with China is not the reason why we're impacted. We're impacted because they're too big. The second largest economy. Their financial market, they hold everybody's bonds. Everything they do impact everybody else, whether or not connected. So our challenge is there anyway, and it's the opportunity that is the reason why we want to be connected with them. So Hong Kong needs to continue to adapt to accommodate the market participation from Hong Kong, from China, but we need to maintain our value and the market structure. They need to accommodate us, but we need to find ways to make sure that they are comfortable over here as well. So our strategy is to entrench Hong Kong as the mutual market of choice across asset classes for both Chinese and international investors. So do we have the ability to adapt and evolve? We need to evolve quickly. So, large number of mainland investors will inevitably come to Hong Kong. That will help us expand liquidity and product suite. And cross-border risk management is going to be very big So unless we're going to develop a fixed income and currency and commodities, we will never be able to capture the price discovery opportunities in those areas in Hong Kong. And competition from other financial centers will continue, but we need to make sure that we do not go down and racing down to the bottom on standard. We maintain our standards. If Singapore or other markets choose to do certain things, we may or may not follow. And there are things we will follow if it makes sense, but we're not going to follow simply because we want to lower the standards. We do not want to do that. And we will continue to enhance our market. So our strategic plan in the next 3 years will include a whole range of market structure changes, like pre-trade risk management, position limit, portfolio margining, holiday trading hours, and so on and so forth. We're also going to continue to, this is going to be something that we have to do. Our systems are too old for too long. So we will build next generation trading platform in the next 3 years. And we will begin to build next generation clearing system, probably not going to be able to finish by the time we finish the 3-year strategic plan. And we will continue to build other market infrastructures. So key drivers, again, in recap, redeployment of mainland wealth into capital market, international and domestic, increasing international participation into China, rising mainland outbound capital market investment opportunities and risk management product, and Hong Kong is uniquely positioned as a mutual price discovery point. So our vision is connecting China with the world and reshaping the global market landscape. Thank you.
Thank you, Charles, very much. You have some water if you'd like.
Yeah, okay.
Okay, well, just a little bit of housekeeping. Please see if I can do this. ABC. A, we'll do Q&A alternatives. English, Cantonese, or Mandarin. B, please be brief. And C, please speak clearly. I failed to do that, sorry. C, please speak clearly, and please wait for the microphone so our friends doing SMI in the back will be able to translate. And again, we'll take questions in English, Cantonese, or Mandarin. Please do raise your hand. Last but not least, just for our reference, please do give us your name and organization. Okay? So with that, we'll open the floor. Maybe right here, Enoch, or the right.
Hi, thank you, Charles. He's Enoch Yu from South China Morning Post. A couple of questions. As you mentioned, we definitely will ask the question about your plan to launch this, the third board or revamp of the GEM. Can you give us more idea of what this new market will be? Secondly, you also mentioned about the acting as a center for the renminbi fixing center. Can you tell us more about your plan, how HKEX can play a role in this renminbi price discovery, and whether you think that would be the right timing, consider that the CNH market actually has become very volatile recently, and thirdly, about the commodity.
2 is enough, right? Okay. I don't think I want to spend a lot of time on the regulatory side because David Graham is here. You could follow up with him on greater detail. But I think when I talked about continue to enhance our listing regime in Hong Kong, I think clearly there are a number of things we'll be looking at and or should be looked at. Basically on your entry level barrier and on your exit barrier, and anything in between on the regulatory and enforcement area. So I think, the constant discussions about Hong Kong, whether Hong Kong should change the system so that more companies, particularly in the new economy, can participate. That's talking about the lower, finding ways to see whether we can make it easier for them to come. Another very big debate is sometimes we have bad companies, and whether or not the barrier is too low for them so that we should raise them. So we are constantly being caught in between people who wants to lower the barrier so that more good companies and emerging companies can come. But every time we have a bad company, we're talking about wanting to raising the barrier. So that is something we need to understand exactly how we want to think about it. So essentially, and then every time you raise the bar, you also need to make sure that what is the exit. If this market is just people keep on listing and nobody can get out, then this market is becoming a little bit, and you have a lot of shells, so how do we deal with that? So that is something that as a whole market we need to think about. And the US, very little entry barrier on the entrance, very little on the exit, so people, things go through, flooded out very quickly. Good companies can easily come, and even if they don't make any money, companies becoming bad, they get flooded out very quickly. We sometimes want to control. China obviously control both sides much more than we ever will be, and we are somewhere in between. And what is the best balance to strike? So that's the question we're asking. But I'm not going to get into specifics as to exactly how and when, because that's not in my own territory. On renminbi, we will see up and down. Renminbi up and down, fixed income up and down, equity up and down. We do not plan our strategy based on every day's market. Otherwise, we'll be having this sort of meeting every other week. Or this week, we're up. Or next week, we're going to be down. So we will focus on what is good for Hong Kong longer term, what we can do, and we will make that investment. We'll make that movement. We'll continue to move, whether or not the market down or not. And renminbi, with the renminbi, the CNH, the rate is up, the interest cost because of the intervention, whatever, all these reasons are precisely the reasons for us to develop a lot more product so that investors are able to have more tools to adapt and adjust to changing market conditions. Next.
Maybe here at table 2.
Hello Charles， 我是有线电视那个邱子薇。那再追问一下，刚才也提到那个 football 这个问题，是不是之前有一些的VIE 那个的问题，还有未来要吸引更加多的 good company， 好像是那个互联网的更多公司来香港去上市，所以要推出那个 football， 还有那个去那个 jam 去更多的那个 regulation to 吸引更多那个好像是互联网那个企业在来香港。第二个问题就是，我记得你在那个 branch 谈过一下那个人民币的在那个贬值的时候，好像是会推出那个债务的人民币债务那个产品呢，是跟随那个人民币波动的情况去那个制定那个策略，但是又没有这个 timetable， 还有那个现在是这个贬值的预期。那个新温的之下，你未来那个的策略了，那个在人民币产品那个策略是怎么样的？
对，我想回答你第二个问题，先回答你第二个问题，就是人民币，我是当时是这样说的，就是人民币在有一个升值预期的通道中间的时候呢，你是有 assets 的人希望持有人民币，但是呢，你在一个人民币贬值的通道的这个过程中间呢，你是希望有人民币的负债，因为这就便宜了嘛。所以说呢，我们不是说人民币由于贬值了，我们就弄一些负债产品出来，是说人民币贬值的这种预期底下的话呢，就有很多人的负债的需求就需要了，也就意味着说呢，人民币的无论是升值和贬值也好，你呢都要有一些很好的就是这个汇率的产品摆在这儿，让大家来做，因为呢，你要是升值的时候，那肯定是没有人愿意拿人民币的负债，那就负债的人是不会用你这个产品的。那现在如果你进入了贬值的空间的时候呢，那些需要人民币资产的人呢，他就不愿意要人民币资产，他不要人民币资产，他就不需要到你这儿来交易你这个货币的这个敞口了嘛，那他就不愿意来了。我们的意思就是说呢，我那句话的意思就是说呢，人民币的升值也好，贬值也好，就会有资产负债表的两边的人呢，不同的时间会来愿意要交易这个人民币的产品，所以这个产品是给大家全面服务的。所以大家不要认为人民币升值的时候，哇，大家我们人民币的产品就很好，人民币贬值了没人要人民币了，人民币贬值的时候有人要人民币去负债，那他负了债以后，他仍然需要去管理他的风险的敞口，进行交易。所以我们这个产品呢是为大家共同来服务的。你刚才讲的那个，实际上你刚才讲第一个问题呢，我刚才已经回答了，但是我用中文呢再简单的说一下，就是我们香港的话呢，上市的这些事情呢，我都应该交由上市科和这个证监会来回答这些问题。但我自己来看的话呢，从市场上来说的话呢，我们有个矛盾，我们一方面希望好的公司 我们把这个标准给它降得越低越好，这样让早来上市，不要挡在外边上不了，我们这个市场就会越来越活跃。坏的公司，我们很希望把这个门槛弄得高高的，省得坏的公司到我们我们市场来捣乱。这都是一些 wishful thinking， 因为你又不知道哪个公司是好公司，哪个公司是坏公司。有的好公司看着好公司，最后变成坏公司；有的公司看着不怎么样，所以你不可能在这个 exit 上面，在这个 entrance 上面呢，你就老来调整。所以我们有时候经常批评一些监管者说：“你看这个公司出了事情了，你们怎么能让它来上市呢？那怎么？那要想不让这样的公司上市，这些公司上市的时候可能没有什么毛病啊，或者它是完全符合标准的。那你除非把这个上市的，你哪怕是把上市的这个标准提得再高，你也不能保证已经可以合格上了市以后的公司不会后来再变坏，或者他骗你，对吧？所以在这种情况底下的话呢，好公司、坏公司、吸引公司、不吸引公司，这个东西一定要是入和出平衡了就好办了。你要是想把这个，咱们现在有时候喜欢把入的门槛抬得很高，很多公司挡在外边。这样也许呢，坏公司呢挡在外面比较多了。但这种时候呢，我们又把这个出口呢也挡住了，因为大家上市资源成了很昂贵的上市资源，这壳资源很贵，因为它下市很难。国内内地市场就是这样，所以这个壳资源到处都是壳资源，这是属于很不正常的一种现象，对吧？但是呢，它这个市场呢是这样的一种，但你要想把进的门槛降下来的话，那你要想清楚，降下来就有可能有些鱼目混珠的，这个滥竽充数的。坏人就可能混进来了，混进来怎么办？那监管者又成为问题了。所以我们就说呢，你一定要把入口和出口统一考虑。所以你一定要把入口降低，你就一定把出口也要降低。进来的人不行了，就赶快赶出去。所以说呢，我们在现有的主板里边，在 GEM 里边，有没有可能把两边同时弄？没有可能两边同时弄，因为两边同时弄就有很大的既得利益，已经今天有利益了。你今天要动大家的奶酪，要商量的，要咨询的。那不一定能够大家都能有共识的，那要有可能搞新的东西是不是好一点呢？那搞新的东西，我就一定希望想清楚，进出统一，进的容易，出就总容易。你别到时候又搞一个进的很容易，这出的又不行，那有问题，或者进的很难，对吧？咱们要把这有机的平衡起来。下边。
Okay, maybe Kathy on table 3.
Thank you. 香港经济日报严倩，乔家总裁，我跟进一下，我有2个问题，第一个问题是跟进那个3板的问题，因为这是个新的概念，所以很简单的，比如说
3板，
就是新的那个板，第3板就是
3板哦。
对，就是什么样的公司会比较去这个板？就是会不会有不同股权架构的，或者是没有盈利的是可以去这个板？然后您提到就是进跟出，是不是就是说出这边是要将来进行一个强制退市这些新的一些要求在这里？另外就是说哪一些投资者是可以去交易这个3板？它是 retail investors 还是出于保护考虑要一定是专业投资者？另外一个就是关于新股通。新股通一方面是国际投资者可以发一些股份给内地投资者去买，
国际的发行
者给内地投资者买。另外就是你希望内地公司可以有一些股份来让国际投资者买。那在这个构思当中有个问题就是说，怎么去哪些投资者可以参与呢？然后它的那个 liquidity 的那个 pool 是在哪里呢？它是在现有的沪港通的那个 liquidity 里面呢，还是它是怎么去参与进去呢？就是
好，明白。这个首先3板的事情呢，千万大家，我在这说的都是个人意见，我不是监管者，我不是 SFC， 这都是 SFC 是我们的大老板，对吧？这个事情要问大老板。那你们问我们呢，我也不愿意，我只是把我的一些想法和这思路说出来，这个不代表任何的上市的政策和上市的这个决策。所以说呢，我在这里边也就不能再谈啊，你这样准备做，谁来可以做，这都是我自己在想的一些这个想法。所以说还是这些问题，要么去问我们的 David Grant 在那边。那个头光的那个，这个也要么就是去问Ashley 头没那么光啊，这个然后呢我要么去问政府啊，我这边只是个专业人士，随便这个点评了几句。那么关于新股通的概念是什么呢？新股通的概念就是一旦咱们先把新股通是发行端和交易端，大家先想把这事情往简单了想，交易端就跟沪港通是一模一样了。就是今天的沪港通呢，是说你在那边上市了，我到这边来买这个股票。那新股通如果能做成的话， 也就是你一旦买到股票呢，交易的时候呢，又跟沪港通是一模一样的，就是你还是拿的对方上市的股票。那新股通做了一件什么事情呢？就是说你那个发行的时候，就是从发行人那儿直接把股票能不能给到对方。现在都是你要从已经买了股票的人那边，在二级市场上把它买过来嘛，对吧？比如说今天我们有个投资者在这边要买宝钢的 A 股上市的，那他是要到 A 股二级市场上去买这个股票，从一个他们两个价格最好的那个 match 上卖给他。新股通如果能做成的话，这东西都是如果就宝钢直接发股的时候就把香港投资者包括在里边了，就可以直接发过来了。那么呢，至于说发的时候他怎么去参与，怎么和国内投资者一起参与，可能是定向给这边发，还是说我们参与他国内的发行，这都是属于今后很多方式方法都可以探讨的，这都是一个现在处于探讨阶段啊。谢谢。You choose so that you offend the people.
Gregor, right here, very quickly, yeah. Who's that? Mike, if you would. Microphone, please.
Oh, microphone, not Michael. Oh,
okay. Microphone for Gregor.
Thank you. Hi, it's Greg Jones from Wall Street Journal here. My question is, you talk about Hong Kong acting as a price discovery centre for mainland China. Obviously, over the past few weeks, we've seen the Chinese government taking quite an interventionist stance and reducing the ability of some Hong Kong markets for some products. So how do you reconcile this price discovery ambition with the more interventionist stance that the Chinese government is taking? How do you think that'll play?
First of all, price discovery, we're not trying to be China's price discovery. We're trying to be a price discovery center of anything and everything. But obviously, with our great strategic access and strategic ability to deliver, we could bring Chinese product here for price discovery. So we're not saying this price discovery is going to be the most authoritative, price discovery. So where Chinese government does something that is impacted. We're really talking about we are able to. Price discovery means a product is fully participated by anybody who might be interested in participating in that. That's really what we meant. So in commodities, we all know Chinese investors are interested in LME product. Right now, LME price discovery is a global price discovery minus China. We want to get rid of the minus, make them coming here. We also know that domestic commodity prices are determined by domestic forces. Without even the domestic participation of the real economy, the physical users, let alone international investors. So what we wanted to do is to fill that gap so that price discovery of commodities inside China is not only fully participated by domestic physical users and traders and financiers and everything else, and hopefully by having that connection, by having that benchmark, we can build a connection, and then maybe international investors can also participate in that price discovery. So I think you're using price discovery as an excuse for you to ask what you really want to ask is, what do you think of the Chinese obnoxious intervention policies? That's what you're asking. You should ask directly, because I always answer things directly. I don't like it. I don't think you like it. I don't think anybody like it. I don't think they even like it. But that's what they did. That's what they think they have to do. They probably will do it again. Hopefully they will do it less. That's all I can say.
Maybe the center table gentleman in the white shirt.
你好，我是无线电视的何金燕。我想问一下，那个今年港股的成交预期会同上年会有什么不同？那个资金流出会不会影响这个港股的成交？还有，你去年大时代的时候叫人买股票，那现在股市下跌，那个股值下降了，那你还会叫别人买吗？然后我想你讲一下那个新股通还有债券通的构思。谢谢。
新股通、债券通刚才讲过了啊
那个
你要具体问哪个东西没讲清楚，我跟你讲，你让我再重复一遍，我就不想重复了，好吧？那回来你的第一个问题，成交，我不知道成交怎么样，我天天就想关心成交，我天天研究成交，我天天都睡不着觉，想知道明天的成交量是怎么样，谁会交易，谁不会交易，为什么不交易？ 我 have no clue. I wish I do. I don't. And 我去年没有让人家买股票，我去年有人叫人家买股票吗？我不记得我让人家买股票了。或者你说我去年怎么说的？我说我应该说该买股票是就买是吧？该卖的是就得卖了是吧 ？OK 好。
Peter on table 2, white shirt.
Hi, Peter.
Hi, Charles. Peter Lewis, RTHK Radio 3. You mentioned that you want to also provide a gateway for Chinese investors to access international markets and tap into that big pool of savings with international product. Does that mean that as well as London, you're also open to tie-ups with other international exchanges, whether that be a formal tie-up or just a more looser arrangement to allow Chinese investors access to those markets and those products?
Yeah, thank you. I think we're going to start with Hong Kong first, so that we can bring international product here, so that Chinese investors don't have to go too far in order to be able to access to them. And then we're going to start with London because we have better control over it, so that Chinese investors can either invest through Hong Kong in London, or moving London over here, or directly into London. And then only when we have all this access pretty sufficiently, kind of attested and is actually robust, a lot of people participate, and there is excessive demand for even more. Maybe we will try to see whether somebody else do another link with us in the American time zone. And that's something that probably beyond this 3-year strategic plan, at least it's not part of our plan now. But things could happen, some nice things could pop up, and they have something that the Chinese are screaming to get invested, but there's no way that they can do it directly on their own, and we are able to bring something that could be explored. Thank you.
Maybe we'll go to the second row of tables. You haven't had a chance. Maybe Bosco, I think, back on table 6.
Could I get some water?
Thank you, Charles Bosco from Hong Kong Economic Journal. 我有2个问题，就是第一个就是想问一下，就是其实在上一个3年的那个计划，你们也说过要吸引的是international company 来香港上市，但是过去3年我们好像还没有看到太多呢。其实今个新的3年计划，你会怎么样去吸引的是国际的那个 IPO 来香港呢？还有第二个问题就是大约就是去年10月份的时候，你跟我们谈过，就是那个轮港通，就是你预期就是要1年的时间，就是那个欧盟那方面就会批出来了。你可不可以跟我们update一下现在那个情况是怎么样？你觉得今年可以开通吗？最后就是想问一下，你刚才说了很多3年之后3年要做的那个工作，你觉得哪一些是比较重要，还有就是比较容易就是先做的？谢谢。
好，谢谢啊。你讲的吸引新股上市，就是我们刚才讲的新股通啊，不是国际公司上市，就是讲的这个新股通。我们一直认为，香港如果就靠今天的投资者基础，很难吸引到大量的国际公司到香港来上市。这个呢是属于不是我们想象的，让我们做点工作，我们雇几个人，天天跑去给他们敲门就来了。因为对这些公司来上市，到这儿来上市的话，最重要的问题就是到上来干嘛？他已经在美国上市，他已经在欧洲上市。那这些公司上市，他那些地方的法律啊，也是欧美法律，也是国际市场，那没有什么。就香港给他有什么 anything unique， 我又不可能说把这个标准降低。那所以说呢，你在今天的情况底下，在我们的投资者基础和他基本相似的情况底下，他到香港再寻求一个第二上市，没有什么过多的意义和利益，所以说他不会来的。所以我们也就这些年就没有去花很大的力气去做这个事情。但是我们今天为什么新股通如果做成了，那不一样在哪儿呢？我们突然，因为他们这些国际公司可以选择到中国去上市，那就不一样了。那个中国的上市有大量的新的股民有可能愿意投资，那他要做这个选择，他愿不愿意去？国内的法律能不能容许他？能不能融合他？能不能让他能够做好？他能不能接受？那我们现在认为呢，如果说在沪港通的这个大的框架里边能够加入新股通的话，如果 那他就到香港来的话呢，是没有任何障碍的，也没有任何的问题的。那如果又到了香港来，又能够有新股通的接触到了国内的投资者，这个时候的香港市场给他 offer 的这个东西呢，就完全和以前有根本的不同了。有着根本的不同，这个时候我们就可以来。同时，这个时候我们要把国内的投资者和国内的券商和国内的交易所都要动员起来，让他们觉得这个事情哪怕就是通过香港来做，对国内也是有利的。比如说一个大的国际公司，如果能够做新港通的话呢，新股通的话，我们可以让它一定最后是交易是通过上海或者深圳去交易的嘛，它不是在香港这样交易嘛，它是沪港通形式交易嘛，所以他们应该可以，能不能给它也挂个贴个牌啊，对吧？国内的券商也参加呀，国内的交易所也参加呀。我们去 marketing roadshow 的时候，都是要国内的券商配国际券商，这样大家都是一个通赢。所以说我们在想这个问题，这就是新股通的问题。轮港通我刚才讲了，轮港通呢是两个做法，一个做法是便宜的做法，一个做法是贵的做法，一个是快的做法，快就便宜；一个是长，一个贵的做法就长。便宜的做法、快的做法是什么呢？就是因为轮港通最核心的理念是让亚洲地区的投资者在亚洲时段投伦敦的产品，对吧？这是轮港通的核心理念。那快的方法、便宜的方法，就是把那个合同弄现金结算的形式直接在香港推出来，大家就在这交易了。这很快就可以做成，很便宜就可以做成。我们可能很快会考虑这个事情。mini 已经是一种形式，但 mini 是人民币，是 monthly contract。我们如果把 LME 的那个 contract exactly the same contract 把它美元形式搬过来，在这发，在这做，那就很快很便宜。但是它有一个不好的地方呢，就它又在搞了一个新的一个 liquidity pool。你是香港在亚洲时段的人和自己交易，和里边呢这边是现金结算的。你如果想要全部都成为一个 liquidity pool， 那我们就得做更难的那个、更长的那个、更困难的、更贵的那个，就是要把这两个交易所的 clearing house 连在一起，把这个交易的那个 trading link 连接在一起，就等于搞个沪港通。那这个时候呢，就要有很多的交流和伦敦、欧洲的这个监管者，因为这有 clearing house 的 connectivity 的问题，我们也有一些系统的安排。这个呢，就花钱会稍微要多，而且时间可能要1年。所以我们现在呢还没启动这个难的，我们很有可能先启动是简单的，我们再启动难的。那么呢，如果启动难的今天就启动，应该1年内差不多应该能搞定。但我们还没有启动。你是不是还问了我个别的问题？这几个哪个更重要啊？我觉得没有说是哪个更重要、更不重要，都重要。要不是我就不会写在这儿。唯一的问题是哪个更难，哪个更容易，哪个做好了以后 impact 这个影响力特别更大。那我不然你要是让我说的话，我可以把这张图拿回来。这张图里边 equity 应该来说，咱们从几个维度，哪个难易一个维度，影响的大小一个维度，好吧？那你要这么说的话呢，我觉得可能应该是说，这个影响力很大，也比较不那么难了。深港通马上就推出来了，我马上不是说马上啊，是这个推出来了，然后沪港通的这个扩容比较容易，影响力也比较大，大家都比较理解，对吧？这个有可能很难，有可能很容易，无论难还是容易，只要做成了，影响非常大，好吧 ？Commodity， 这都比较难，这都比较容易，但是呢，每一个呢的影响力呢都可能是每一个的影响力都比较有限。这个呢，就我刚才讲的，有难的、容易的做起来，这个长远来说会非常重要，等于我们的互联互通超越了市区，超越了市场，会非常重要。但这个长期才会有效果，大概3到5年以后才能看得出来。开始做的时候还蛮难的，就是这个。 这个 connect with onshore exchange 呢，如果能做成，影响最大，等于这是属于最能够把它一下子现在流量，但问题它现在流量也不行了，另外它还得愿意跟我们做啊。那这个东西呢，就是最不确定，这要求国内的交易所愿意跟我们合作，这个是最难的，但是这个对香港的影响是最大的。这个要做成了，有可能彻底的改变我们香港的金融中心地位，但做不成也不会亏损太多，也没有什么，因为它不是一个需要扔很多的钱砸进去要建一个什么什么东西，这个巨大的努力，这个东西不是我们大家都不懂的，只要重新，整个这是一个新的整个的新的事情。FIC 整个来说都是属于比较新的，做起来呢都不是那么容易，做完了以后的效果都不会很快，长期来看比那个 commodity 更长期的 Bond Connect 应该来说对香港来说又是一个很重要的里程碑，但这个东西呢甚至5年都可能看不出来有多重要，但是这个东西呢必须要早早的把这个桩打下去，把我们这个地给说这个地是香港的地，对吧？我们这地方可以干事情的，这个地你把这地标得弄起来。我不知道这样可能先就以这种方式回答你这个问题吧，好吧？
Okay, we're running a little bit late, so we're going to try to get maybe 3 more questions in, but just ask each person to ask one at a time at this point. I think there might have been some more questions over here. Maybe Jennifer had one? So, yeah.
Hi, Jennifer Hughes, Financial Times. Just a question on the...
Where are you? I want to look at you. Okay, sorry.
Hi, Charles. Just about, you talked about Primary Connect. Can you expand a bit more on what you'd like to see and what's really possible in the next 3 years? The idea of, more Chinese and international money being able to go into primary offerings in each of the markets.
Yeah, I think Primary Connect, there's no real technology hurdle. It's really just a trading link. They just choose to come here to list and allow the offering to go in China, or they're allowing the offering to go out of China to come here. There's no technology hurdle. There's no product hurdle, and there's a lot of demand potentially. But the biggest hurdle is a regulatory one. Essentially, is that whether or not the connect, which is largely secondary in nature, with the rights issue as the only element of being a primary issue, which is permitted under the Connect program. So conceptually, it's already permitted under the program. But that's more about already listed companies doing additional offering on a rights issue that is permitted. So whether that opening can be regulatorily expanded to include an actual issuance of new shares outside the context of a rights issue. That is the big regulatory discussion. I think, and also it's a discussion for China to think whether or not they would like to preserve an exclusive way for all international companies to come into China only, or they could also say that Chinese investors should be given the opportunity to invest in other companies earlier and in alternative venues, including Primary Connect. So this is largely going to be a regulatory one. In terms of southbound Primary Connect, if let's say a Chinese company issuing, whether or not international investors will be allowed to go participate in that, then there's a regulatory decision that Hong Kong needs to make as to whether or not those companies, particularly in an IPO context, which is not listed here, is listed there, but it's in an IPO that we do not review IPO, whether or not Hong Kong investors can participate. And if the answer is yes, then that's okay. If the answer is no, then the question becomes, does it make a difference if we allow different categories of investors to invest? Would the regulatory consideration will be different? So that's how I would be calibrating that particular issue. So it's largely a regulatory mindset change, whether that's something that can be done.
I think I saw someone from CBC, Joanne, on table 6, very near Maria.
Charles. Joanne from CNBC. So you mentioned just now, you said that you didn't like the intervention by mainland authorities. And since the beginning of the year, Chinese officials, mainland authorities have been trying different ways to stabilize the market that haven't been giving investors much confidence. What is giving you the confidence to push ahead this connect that is for the next 3 years that will give us more that would strengthen the mutual market access with the mainland, between Hong Kong and the mainland, and at the same time expose Hong Kong to mainland China's risks?
Well, we do not pursue the connect because they give us confidence. And we will stop it because they don't give us confidence or give us less confidence. That's not the driver. The driver is investors need to be given a bridge. Whether they give confidence or not is the issue whether you want to cross the bridge or not. We're not going to say, well, since there are bad stuff over there, so I decided not to build a bridge. And I actually, now out of certain becoming everything become hunky-dory, we build the bridge. And then tomorrow they become bad again. Do we cut off the bridge and explode and blow up the bridge? We can't, right? Bridge builders build the bridge for people to cross when they want to cross. So we build the bridge. If something happening there that you don't like, you don't have to cross it. And other people may actually think it's okay to cross. So it's choices. So I do not want to, sometimes people ask me that question, what is implicit in there is that we're making people to cross the bridge, or people are obligated to do it, or if we do this, you have to. No, you do not have to. This is just something. Another implicit question people sometimes ask is, if you have not built the bridge, we would have been a lot better off. We would not have been impacted by them. Then my question to you is, New York is thousands of miles away, but they are just as impacted as we are. Not because of the bridge. And also, just think about the bridge is a cash bridge right now. So a lot of people say, we were being shorted. But a lot of people, and we were becoming a cash machine for them, for the Chinese investors, because they're coming here. Because on those few days, there are a lot of selling by the Chinese, particularly on Connect. But when you say it's a cash machine, somebody has to deposit the cash first in order for them to withdraw. They're withdrawing their own money. That means that there's a point they actually put money into Hong Kong. And they, if they put money into Hong Kong and one day they don't like it, they want to take money away, you should let them take it away. But if they're taking your money away, then we have a problem. But I don't think they are, right?
Maybe one more question, maybe the far side of the room, maybe way, I guess, right here in the blue in the first table. Lance?
Hi, Charles. We do of China News Asia. I suppose it is similar to the last question. What people are really wondering is you obviously are frustrated with the interventions. Several points in your presentation, you also mentioned there are products to be developed, but this is not a good time to talk to mainland authorities about it. Why do you still believe there will be a good time again? Why do you think the opening of the financial markets are still inevitable?
Well, it is inevitable because we had much more difficulties years ago. We have come this far, and as much as difficult as we are seeing today, I don't really believe anything has changed in the overall direction. But the question we need to ask ourselves is to see why they're doing it. Because unless you understand why, you will never understand it. Because it's very easy to criticize. It's very easy, and also people say, Charles, you always find a reason to apologize for them. We actually need to understand why it's the case, because when you understand why it is the case, then that gives you the confidence to determine what is your course of action should be. And why we're doing a lot of this? Underlying all of that reflect our clear understanding of how that market works and why that market hadn't worked in one way, but in what ways that it could work better in the future. That market is fundamentally really a triangle relationship that you need to figure it out. 80% of the market is retail. That's one big corner. The goal, so that's reality. But the ideal, the goal, the aspiration is to make that market to be like everybody else, an institutionalized market. And then the relationship between the regulator and the government with vis-a-vis these two big ideas. Reality, ideal, where the government fit into that. In a good market run, these two do not get into too much of a conflict. Institutionalization, meaning you need to put more instrument into that market, you need to allow people to short, need to be, index futures, options, derivatives, many other tools and weapons and new instruments and new toys in order for the market to be institutional, because in a real institutional market can go up and down. People make money and lose money at the same time. In a down market, people can make money too. But vis-a-vis a retail market, a retail-dominated market, just think about it. The retail market in China are not allowed to access any of the sophisticated tools because the tools are very complicated. They say the guns are very dangerous. You can't play with it because you could shoot yourself. So it's very paternalistic. It's very good protecting the retail. But so when the guns are not shooting at each other, the guns shooting into the sky, everything is all fine. I think everything is fine. But when in a tremendous stressful moment of history, of economic and financial relationships, this two becoming very big of a conflict, because the guys with tools will be able to dictate and will be able to predict what the little guy is going to be doing. And the little guy will only be able to make money when the market is going up. The little guy will always lose if the market goes down. So the regulator is split. China needs to modernize. Therefore, we need to get all the new tools and toys and everything. Which means these people can actually make a lot of money at their expense in a stressful situation. But then if you say, okay, then we need to be fair. Little guys should be protected. You guys cannot shoot them. You guys can shoot yourself. But then it's a small market. 20% shooting themselves won't get anywhere. So how do you do? And then if a regulator can be totally distant from it, saying, it is what it is. You guys figure it out. Here's the rules. You just follow the rules. If it ended up a lot of blood, I'm sorry, it's not my problem. You already know. Retail, you should get out of the market. You should not do it. That's one way of doing it. But you all know China reality today, you cannot do that. The government has a lot of power, which means the government has a lot of liabilities and responsibilities and obligations. And that obligation with the retail translate into actions that sometimes have to curb this side. And when you curb this side, we all scream because we thought, oh, you said you're going to institutionalize that market. You said you're going to modernize this market. You said you're going to make this market into a real, modern market. What are you doing with all of this? And then you need to take their hats off and wear the other hats and think, what about the 80% of the retail? I'm not justifying that they need to do it. I'm telling you, they are living in this contradiction every single day. And decision is made. When everything is all reasonably easy, okay, let's modernize the market. When everything is very tough, let's protect the little guys because the little guys are suffering big time. So it is that balancing that is dictating a lot of the decisions that we are seeing. So it's not like they don't understand you. So if you keep telling them, oh, you're doing everything wrong here. He said, yeah. You think I'm stupid? I don't know that? I do know that, but I'm here. So when you understand that, that's why we want to do Hong Kong-based derivatives. We want to do Hong Kong-based other things. We want to go into China to do physical. So many of the things reflect, we understand the logic. And there are things, therefore, we can help here that also give us benefit. And there's things we can help here that give us benefit. And we also need to give them tools to say, maybe this conflict can be managed differently. Maybe certain things you can manage offshore. And there are things you protect the retail onshore, you manage derivative offshore. Is that a possibility? Is that an option? That's what we're exploring with them. Thank you.
Charles, thank you. It's after 1:30, so let's maybe wrap it up there, and we'll have lunch together. You can ask some more questions of the executives over lunch. So thank you, everyone.
Thank you. Thank you very much. Really appreciate it. I know lunch, I've been too long, but hopefully you can enjoy the lunch.